Nice continuation last week for SPY to go all the way up to 455 and close the week there as well. So we are nearing my 4700 SPX target at a pretty quick pace here. Remember, I have that target by February of 2024. Now, what I do want to talk about though in this video is we are at a critical resistance point. And not only that, there is also dark pool distribution, or at least potential distribution up here around the 450s to mid 450s. So that could lead to a minor pullback or at the very least consolidation for the next week or so. So the first thing I want to mention here is both of these trend lines. I have one, a pivot here at roughly 454.02. And then the other thing is this key downward trend line that goes all the way up to the all-time high that was made on January 4th of 2022. You can see if you drag it across to the previous high that was made in July of this year before this major correction that we had. We just now closed right on it on last week's candle. And also just based on the weekly chart, it's been absolutely relentless week after week. For 4 weeks straight, there's been bullish closes, bullish candles one after the other. So from a technical perspective, just based on the strength of the candles, this looks like it is likely to continue. However, this is the last rejection area, or at least the last major resistance before that 4,700 price target on SPX will be touched. So I would not be surprised to see some form of a pause up here. Now, based on a trade setup, I'm not going to short this. Remember, if you've been watching these videos, I do not plan on shorting until February actually of 2024. I believe that would be foolish at the moment since the macro trend has been to the upside for the last month now. And it's very aggressive as well. You don't want to short into an aggressive uptrend unless you have very tight risk, but I'm just not willing to do that. I was already able to capitalize on this upside. No reason to give back any of those gains attempting to short it. And I don't see a reason to at the moment just because of how strong we've been closing, like I just showed you on those weekly closes. But I just wanted to bring this up because there could be some form of a pause around here. And I'm not just basing that on the technicals here. Also, like I just showed you, there's potential distribution up here. We have 1.9 billion worth of SIG dark pool prints at the 450.79 level, as well as if you go up a little bit further here, you can see that we had 2.9 billion worth of signature dark pool prints at 455.07. So right about where we closed, or right near that level where we closed on Friday of last week, there was 2.9 billion worth of prints. That is likely a form of a large sell order. So of course you can see that manifest in price afterwards, where there's some type of pause like I just referenced, or a type of a mini pullback from here. I don't expect, if there is a pullback, for it to be substantial at all, just because, again, like I just showed you, the weekly candles are so strong at the moment. So you really have to see a level like 450 get broken for it to be a substantial pullback. But for all intents and purposes, this is likely just going to pause up here before it continues on its merry way to my 4,700 price target for SPX. But the reason I wanted to bring this up to you in this video is not because I'm interested in a trade setup up here, but rather I'm personally not going to trade the S&P 500 for the next 1 to 2 weeks because I don't expect it to do that much. It really needs to cool off up here, whether it be with a mini pullback or just basing around this range, roughly between 452 to 455, let's say, base around here before continuing up afterwards. It's pretty overextended, to say the least, after its major bounce from the end of October over here. So I would not be surprised to see some type of basing that'll act as a breather really for the S&P 500 before continuing up afterwards, which also means there's not going to be that many opportunities for the next 1 to 2 weeks for a trade setup on the S&P 500. So my focus is going to be more so geared to individual tickers, such as, for example, over here, Tesla. I really like this right now. And it's not because of the potential reward in this case, but rather the minimized amount of risk that you'd be taking on from a long entry here. So what I'm looking at right now, if I go to the 15-minute chart, is the 232.09 level. This pivot that I have on my chart was able to hold all of last week after it was touched between Wednesday to Friday. So going forward into this week, this level has to hold on the hourly, the daily more so, but really the hourly, in order for there to be any upside bias or any form of a major bounce and continuation. So this level automatically is going to act as our risk for any type of a long trade setup. As long as this level holds, we can continue to bid and go up from here. There was a hard rejection from over here on Wednesday of last week, but it was able to hold over here and is able to stay contained within this range and bounce up afterwards. So for this week, the risk for Tesla is 232.09. If it were to break below, we'd likely see continuation down to fill this gap over here around 224. But if it's able to hold, and we can see it stay above around this 232.09 to 234.50 range. If it could stay above this range, we're looking at a pretty substantial breakout because of what I see here on the daily with this curl setup. So we have a curl setup, which is basically a breakout of a bullish pattern over here. It happened to be an inverse head and shoulder. You can see the left shoulder, the head, and then the right shoulder. We broke out of that, and then it tapped a downtrend. So we did downward trend line over here. It touched it, and then it pulled back briefly and got picked up after that. This is a valid curl setup because it was able to have a short rejection like we saw here, and then get picked back up, and now it's attempting to break back out above this pattern here, which would be very bullish and would likely see mid 250s as a price target from there. So again, this is all contingent on 232.09 holding into this week. So based on the close from Friday, we're looking at about $3 of risk, $4 max of risk for a potential 15, 20 buck mover to the upside. So I really like this risk reward. Again, not even looking at the reward aspect, but just the risk is minimized with us being so close to this key pivot here. So I do like this, as well as, of course, the setup itself. We have an inverse head and shoulder breakout coming out of the golden pocket for the fib sequence here on the daily, followed by this curl setup. I like all three of those things, plus the fact that the risk is reduced. This is a setup that I really am fond of and believe that it can have more upside from here, contingent on, again, this 232.09 level holding. So I would definitely suggest that you keep this at least on your watch list for this week. Another thing you can keep on your watch list, and the last thing that I'll share in this video for this week, is this inverse head and shoulders pattern on IWM. Now, we had the breakout already. It was kind of a weird fake breakdown over here of my 168.82 pivot, but then it was followed by a major gap up over here that you can see on November 14th. But this is a valid inverse head and shoulders pattern, and we're able to get back above this blue trend line here, which is a critical trend line because we broke down below it over here in early October during that major market-wide correction. We broke down below, but now we're back above, which shows a bullish emphasis for continuation all the way up to the mid 180s, potentially even 190 on the high end in the short term. By short term, I mean into end of year here. So as long as we stay above this blue trend line, we're likely to see a continuous bid into at least, again, that mid 180s range. So you can look for setups off of major support levels from here. There's also a valid pennant formation based on last week. For example, over here, you can see it can draw it really quickly, but we had a breakout of this pennant into the end of the day. So if we're able to hold above this, it looks like a valid setup into around 183, 184 range, just because it broke out above. But as long as we stay above roughly 174, this is going to continue to bid just because of this big inverse head and shoulder pattern, as well as us getting back above a key technical level, which is this blue trend line over here that I just showed you. So this is certainly something else to add to your watch list for this week. Again, Tesla and IWM both seem very bullish at the moment, and also are relatively close to their risk, which is another key thing, because as traders, it's not just about the best setup that you can find based on reward, like I just said for Tesla, but it is as much and even more about the risk that you're taking on. So you're able to find setups that are very close to your risk level, then those can provide a nice risk reward setup. In this case, Tesla is the closer one, but if IWM were to pull back this week to around 176, 177, let's say, then you're a lot closer to this level over here, and you can also benefit on this inverse head and shoulders breakout to the upside while only taking about $3-4 of risk for a potential of much greater reward. So other than that, though, appreciate you guys watching this video as always, and I'll see you next time.